Hey traders, happy Monday. This is Chris Pulver here at Market Traders Institute. It is the 19th of August and coming at you with a weekly outlook for all things financial markets wise. It is the 19th through the 23rd. So let's go ahead and take a look. Let's start things off with the currency strength chart for Monday. Not a lot of volatility on the strength meter. We have the pound at the highs coming back to baseline and then back up to the highs once again. But overall, most price action contained for this week. Low end was the Swiss franc down here around -30. Percentile wise, I mean, we're looking at movements that are maybe 40 to 50 pip daily trading range for the day. So not a lot of movement. Looks like the stock market is fighting back. Take a look at the dashboard here. Futures has been positive through the morning. U.S. markets opening bullish and continuing on with the path of futures. So Dow up just around 1%, S&P around 1.25%, and NASDAQ up 1.5%. If we take a look at the SPY really quickly, you can see the volatility. I'm going to go ahead and zoom in on this daily chart, and you can see just day after day, it's essentially just a fight. We have our big scare off, which we had our big gap lower when we had, U.S. and China tariffs escalating. That has since turned into a delay because the U.S. is looking to reduce the timeline, or at least push the timeline back into December. So markets seem to be a little bit more optimistic, and at the same time, at the center of all this, you have central banks that are taking a very dovish stance. It looks like the ECB is going to step in with some type of stimulus package or accommodation package, possibly into September. The Bank of Japan, or the BOJ, continues to target that 2% inflation, and we'll see what happens with the U.S. central bank, the Fed, which has hinted towards additional cuts if needed. We cut rates back in July. It was July 31. Analysts and experts are saying that there's likely 1 to 2 more cuts by the end of the year. So we'll, of course, find out, and it'll be kind of a wait and see on the U.S. central bank. It looks like the structure that tends to be forming right now, we've talked about this in my trading room, and, this is either going to be the bear trap, and this thing just ignites to the downside with a very fast drop, which would be, 20 to 25% from the highs, all the way back down to this broadening formation or this wedge support. But you can see that we have since paused after around the 6-7% drop zone. So right at 6-7%, the market has stalled. We are in this consolidation now. This is similar to what we saw last year in October. This was November. This was December. So is this, July to August, this is going to be indecision before we drop? Or is this going to have one more push where central banks are here to the rescue, so to speak, and we have this push down, this push up, this push down? Are we going to get one more push to the upside, forming what could be, most investors aren't going to see this, but traders will absolutely see this. So this is a rising wedge. Again, this still ends very badly for the stocks overall. So personally, I'm still going to be bracing for stocks to fall and safe haven currency pairs to still take off. But we have seen artificial mechanisms in place for quite some time, and it could still do that. And this could be more consolidation until inevitably this leads to a fall. So just because we go up one more time does not mean this thing is ready to fall. This could be a long awaited, let's see what the central banks do. Let's see how slow and tight this thing gets. But I think all signs are still pointing, even if it's not this year, maybe it's 2020, with some news excuse or catalyst to drive this thing lower, but we'll see how it plays out. So just be prepared for more volatility. And sometimes we look at volatility as it's moving, and that's great when the market is moving faster. Other times we see volatility as it moves, it retraces, it moves, it retraces, and it doesn't go anywhere. But traders are willing to buy low and sell high and try to protect some profits when they can get it. So it is certainly leading to a lot of indecision right now. You can see back and forth. We had gaps that was filled, gaps that were filled. We actually had a gap higher today. That's about the 1% gap. If you go to the daily chart, that is last Friday's close. That is the Monday open today in the U.S. So we could just be staying sideways for right now. This could still drift as we start into September and have a post-summer break, if this is going to settle in with that rising wedge type look. And again, it doesn't mean that it's going to drop. We might head up and all of a sudden everybody's high-fiving and celebrating with new historical highs, and it drops again and then it rallies up again. This could be a long delayed rising wedge that I still think inevitably ends badly, but this might take 6 months. This might take a year. We don't really know until it happens. So just be prepared, that's all. So let's see how this translates in the currency markets. So here we are with currency markets. We'll start in alphabetical order, go Aussie CAD all the way through the dollar crosses. Aussie CAD has broken the trend line. Keep in mind, we are acknowledging that this was a major support level for the last 5-6 years, around 9,100, that did break. So I'm noticing that price is low and slow back to the upside. We will see what oil gives us. If oil has a drop, which oil is still in a large consolidated wedge, if oil drops bearish, then this will be the bottom of the Aussie CAD, and we will come back and find, pivots and inefficiencies and pockets and all sorts of great things that happen with commodity-based pairs. One critical level for me, I'm currently holding long on Aussie CAD. My break even is around 9030, so I'm just a few pips upside down. But the reality is I want to get back to 91. I think this is a monthly pivot, 9100. If we hit this level and close above it, I'm looking for more upside. If we hit this level and we reject off of it, then I think that is support become resistance, and there might be more downside to come. But I think for right now, I'm willing to hold on to this trade, get back to 9100, and then make an assessment on direction from there. Aussie Swiss. In the medium term, I am looking for a weaker Swiss franc. We should be able to get this back up towards, if it's medium term and I'm willing to hold this, we should be rounding out some lows. If we can see some risk appetite coming in, we should be able to get back up into this high around 69.50. I ideally am trying to hold this thing to 70.50. So anywhere between 69.50 and 70.50, I'm going to start taking some profit on this Aussie Swiss, but I'm continuing to hold long in this one. Aussie Yen, a lot of yen pairs I'm just staying away from. Right now, you look at that SPY market that is going sideways. You look at the JPYs, it's going sideways. So I am looking at a pending buy. It's a very easy buy trade. If it gets filled, it is either a trade that works or a trade that doesn't. So if we get filled at 7080, hopefully that is the bottom that allows us to get a run to the upside. If it's a trade that gets filled and then closes lower than these levels, then I'll probably close this out right away and take a small loss. But otherwise, if it just stays choppy, and goes up and we don't get filled, we'll cancel. But we're at a standstill now for these JPY pairs after that aggressive sell-off end of July, first week of August. So that's a pending buy, but watching this one very carefully. Aussie New Zealand, I remain long and will remain long, and we might have one pullback here. This is going to be a similar movement to what we see here. This is, nice little wedge break, runs up about 500 pips. We had our low on the RBNZ. This is actually Aussie news, I believe, and then the RBNZ was this news, where the RBNZ cut rates to 1%. So I continue to add on daily pivots and weekly pivots. I'm going to keep adding and adding and adding. I'm looking for this thing to get back up towards 10800 or higher. There's a nice yellow target for me on my charts. I also want to see, channel resistance if we have resistance somewhere just above the 108 handle. Realistically, I'm probably over analyzing this currency pair, because if I compress my chart, I would say that we should have room to run into this area. Resistance, and this would be, resistance once again, which gets us up towards the 110 handle. Now, I would love to get to 110. I do have a lot of positions in here. I've been building this position since December of 2018. So believe me, it's probably wise for me to take some profit at 108 and then let some trades run and remain and see if I can get that extra little profit run to 110 or higher. But I do think this one has some legs to the upside. I continue to remain long on the Aussie New Zealand. Aussie dollar, we've carved out some lows at 65 or 67.50. We are on the right side of the trend line. I do have some small orders in on the Aussie dollar. I'm really looking for this one. There's just an incredible pivot cluster at 6921. That is a combination of 5 daily pivots in a row, a monthly pivot, and a weekly pivot, all right there between 6921 and 6950. So it is a near-term trade. We might have a double bottom on the right side of the trend line, and then we jump from channel lows to channel highs, but essentially that's what I'm trading. It looks like we're just holding support. We should get something to the upside here around 69.50. Hopefully, 7,000 is a round number. We'll see if it ends up coming back up to test this high, which was 7050, give or take a few pips. But for right now, my target is 69.21. I have quite a few small trades in this one. My break even is around, let me confirm, break even is around 68.30. So if I can grab 90 net pips out of this one, I'll be pretty pleased with that. Anything higher is just gravy. So, but I like this trade quite a bit. See if we can get a double bottom and just get some push towards 69.21 or higher. CAD Swiss. Perfect Storm actually closed out for some profit today. I'll go ahead and show that one right here. So this is 2 trades that close for a loss, and then 1, 2, 3 that close for a win. So overall, grab me some dollars. It hit my channel out level, and now it's currently in a sell trade on 2 positions, I believe. It's in, 2 orders right now. It's up $100, and if it goes back down to channel lows, that's fine. This will be what was working its way back into profit for the buy trades. We'll quickly sell if it comes back down towards lows and hits the channel. then it will grab some dollars. So I haven't really had to do much to change this one, and if it pushes lower, so be it. Hopefully that's a weaker CAD, which in turn will help the Aussie CAD get higher. CAD Swiss in the long run, that's the 4-hour chart. Let me go back to this one here. CAD Swiss in the long run, here's the daily. Even if this currency pair wants to set up for a high, low, and this is consolidation or correction, and we push down one more time, I'm still only interested in buying this. Major support, major support, major support. I would certainly plan, medium term, long term on buying this currency pair from roughly 7,100 towards 7,600 and just hold it. And that's what I'm doing. So CAD Swiss, I'm going to continue to hold. This one might do nothing. This might just go sideways, 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 and it may come down. It might just jump up to 76. Doesn't really matter, but I continue to be bullish for some positive rollover, and I'm going to hold this one long. CAD Yen. Just like with Aussie Yen, a lot of the yen pairs have stalled. So a lot of sideways movement. This one on my charts, I do have this boxed in. We are watching the yen pairs pretty carefully. Are we going to be breaking south for more bearishness? Are we going to break north for more bullishness? In between, you're either trading short term or you're not trading. Okay, there's nothing to do right now. This is all chop. So we either get breakout trades above or below, or we trade in between on smaller time frames, or we just decide to stay out. So my preference is the latter. I am staying out of this currency pair for right now. Swiss yen, this is another one that I'm staying out of. But watch the range, right? This is a nice choppy high, choppy low. If we break lower, break higher. Look for a daily candle to close lower, close higher, and we'll see if we can grab some pips one way or the other. If this goes sideways, currently this is about a 50 to 60 pip range. Let me find out there. I am way off, 160. Ooh, 160 pip range. So even if we have just a measured move, I mean, this break to this push, let's go another 150, 160 pips. Either direction. So if we do break out, it would be worth noting and worth following for somewhere up of 100 plus pips. I would think that's a pretty easy target for that breakout. But until it breaks out, I'm not going to trade this currency pair. Euro Aussie. Euro Aussie compressing the chart. I see a rising wedge. We have had a lot of consolidation since the start of 2000. This is April 2018. What goes up does come down. Then it works its way up, works its way down, works its way up, works its way down, works its way up and down, up again, most likely down again. So I am holding a small position short, and it looks like from this area, I would gladly short it again if we hit the highs. I think we are going to head back down towards channel lows, or previous lows, most likely trendline support around 1.6. So I would look for some bearishness out of this Euro Aussie. In addition, I'm looking for bullishness out of Aussie Swiss. So I'm just going to stay the course right now to the downside. I'm currently holding a position. It's nice and small around 62.30. I do have a pending sell up at this high again at 67.40 if it's filled. If it is filled, that gives me a better break even. And then from there, I look for this to push back down into previous lows, grab a few dollars around 60, 1.60 or something like that on the round number. Euro Canadian. This one's had quite a bit of volatility, but CAD Swiss, watch the CAD Swiss. If the Euro CAD finds a way to sneak out here, we still have a monthly pivot at 52.25. If Euro CAD goes up, expect CAD Swiss to keep dropping. Now, if you want more volatility, look for the Euro CAD. If you want a safer trade, then buy the CAD Swiss at really, really low levels. That's what I'm doing, is I'm buying the CAD Swiss at all these low levels, and I'll just hang on to it. But Euro CAD, we do have this. This was 18 days of consolidation, and then we had this huge run to the upside. It's pulling back again. We might have this run one more time back up into previous highs. It wouldn't surprise me if we spike up towards 52.25 as a monthly target still sits there. But watching for right now, Euro Pound. Nope, I skipped one. Euro Swiss. 876. This is 108.76. Just looking for some channel lows. I do have a pending buy at a slightly lower spot, 107.20 if filled. Otherwise, I'm looking for price to gather some support and head back up to the channel here around 109.60. And ideally, we're either going to, this is what I want to see. I want to see it hold this level, get to the outer channel, and then break this channel and start building support to go back up. We have a monthly pivot way up here at 1260. I think that in the medium term, or long term even, this is still going to get back to 1480 or even 1.20 in the long term. But for right now, I looked at this as we had a bear pattern that is completed. I'm thinking this is going to form some lows and head back into, I'd say 1250 to possibly 1450, which I'm building some small positions in this region. So if we get to 13 to 1400, I'll likely grab some profits and protect them. and just have it be more of a, I'm going to hold it, grab some money out of it, and be done with it. If it sets up a bigger pattern, this would be where I look for highs, pulls back to support, and then buy it again for a bigger move to the upside. A lot of that is probably going to be dependent on the Swiss National Bank being very accommodative and possibly even weakening their interest rates one more time. Where they're currently at negative 0.75%. So if they drop it another 25 basis points, get it to a full 1%, then I think there's very little incentive to have Swiss franc strength. And if that's the case, then we should see a weaker Swiss, and I'm sure that the S&B would be manipulating in some way, shape, or form. So bring it on, I say. Euro pound. 91.38. I'm looking for this to at least make a three-wave move to the downside. It has had, we finally broke the solid run. We had consecutive candles on the daily chart for 14 weeks in a row, and then last week we finally had a bearish candle. So I think this on the daily chart is a 1, hopefully a 2, and a 3, and we start coming back into this area around 8,900, 8,920. From there, as I've been holding some of these sell trades, I will probably just close this trade out for a few dollars, maybe even 50 plus net pips or so on the group position that I built up. And if that's good enough for me, I'll take some profit and be done with it. If it is a little bit lower than that or a little bit more generous to the downside, then perhaps I can hang on to it for something into my zone, where this is where I'm looking to protect anyway. It's similar spots, right? It's 8,900 or lower. I'll grab some pips. But I'm looking for, like I said, at least a three-wave move. So 1, is this setting up for a 2, or is the 1 not done yet? Is this a 1? Are we going back up here? But just keep an eye on a three-wave move, and we should have something lining up into this previous low around 8,920 or 8,900. And from there, anything in net profit probably should be protected. Euro yen has stalled, just like all the yen pairs. Still in a solid box, still waiting. Nothing to do on this one for now other than just be patient. So we'll keep an eye on those yen pairs. Euro New Zealand, 7287. Stalling, just like the Euro Aussie. What is this one going to do? Well, I would like to think that on the right side of this trend line, we might have one more spike to the upside, watch for a double top, and hopefully we have more selling coming. So I'm watching this one just to see what it does on the sideways move. Right now, it is sideways after the RBNZ. I would love to see a double top for this level to hold and then go lower. If it just, simply breaks the trend line, starts working its way lower, that's fine too. I'll end up grabbing some profit somewhere near this low around 6,600, and next stop would be all the way down here at 6,400. So I'm still holding a small position short on Euro New Zealand, and I will add to it if needed at the highs. But I'm looking for something break even or better on the Euro New Zealand to the downside. Euro dollar. Took a trade on this one last week and stopped out with a trailing stop at plus 50. All this was a really simple breakout trade, and dollar index continues to be sideways. Euro dollar continues to be sideways. It's very choppy. It's almost as if the bears refuse to give up control, so we might score a point, 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 until the dollar really has a dramatic shift. And this might go on for another few months. I mean, there has to be a bigger catalyst here for the dollar to weaken. And when it does, we'll see a huge increase in volatility, but it is like the euro just can't buy a break, and plus the dollar's just not giving back any room. There's no wiggle room. The heels are in for the dollar. It's still choppy, and points are being scored. And I think right now it's just easy to hold. The dollar's easy to hold. It offers yield, unlike every other currency pair in the world right now, as far as a comparison to the dollar. So if it ends up striking a low or scoring a point, anybody that's short with me at 11.30, make sure you take some profit or move your stop losses into trapping some profits, because it's probably going to chop around from there. We might score a point at 1.1030 and then come back up and then score another point and then come back up and score another point. So this becomes kind of the trader's market. If you want to get into the trenches here, this might be the structure you deal with. I am more interested in the bigger picture if we can get it. But we did take a simple breakout. We had the trade go, 50, 60, 70 pips in our favor. We took 50 pips out of it, so that's nice. And we'll keep an eye on this one. But it's going to be a grind for the most part. But I'd say that we're favoring bears just to scalp. Eventually, this hopefully turns and gives just a big bearish move on the dollar, which in turn would make the euro dollar rally quite nicely. But that is, that's confirmation that we're not getting yet. So until it happens, we're still waiting. Pound Aussie. Chop suey. A lot of volatility on this one. Lots of indecision on the daily chart. I'd say leave it alone. I still favor some bearishness. This could just be some minor corrections in here. Look for this to keep correcting and maintain this kind of corrective look. I would still favor one more push to the downside. Whether that's a weaker pound that's coming soon or a stronger Aussie, I still think that signs are pointing to more bearishness on the pound Aussie. Pound CAD, 61.55. I'm looking for this one to hopefully deliver a three-wave move. We have a nice little retracement. Looks like, wave one is kind of getting underway, not quite completed. I'm looking for something like this. If we get up towards 6,400, 6,600, if we see oil dropping, I mean, all things could help this get back into 6,600, which is a major level of previous support. So, this is even though it's a high volatility pair, it's still technically obedient. So as fast as this thing dropped, we could at least stage a, 400 to 600 pip retracement. And, traders that have been getting in a little bit early, trying to buy some bottoms here, can go ahead and grab some profit around 64 to 6,500. And if it gets up to 6,600, all the better. Pound Swiss. Another one that's still due for some upside. We're breaking this little inner trend line. I've got a nice little pocket around 2,200. I have my sight set on that for some profit here. If it gets back up to 22, this is going to be a win. This is going to be a win. I've got a couple of small entries that will be losses, but I'm going to assess my break-even level here. I might be slightly in the negative. I think overall my break-even is around 22, so it depends on if I can just hold it for maybe 20, 30 pips net. Maybe I can get 50 pips out of this one. But because this was just a savage trend, which, by the way, we shorted this thing and took a ton of profit on the way down. The problem was it just didn't pull back. I mean, we were wanting to see a pullback or a pause, and then we could sell it again, but instead it just kept going. So it was a pretty relentless trend to the downside. I certainly wish we were still holding those trades from May when we got into it, but it is what it is. So we started to wait for this thing to settle in, started to buy some lows and some nice, divergence levels and probabilities and oversold conditions and stuff like that. So eventually we're working our way back towards like 2,200. So if it gets there, take a look at your P&L, close it up, get out of this trade, and we'll see what happens with Brexit stuff and the pound later on. Pound yen, just like with other yens, just wait. They're clearly stalling. Are we going to have one more push to the downside? Are we going to start forming some lows? Is this a low that starts to work its way back? Is this sideways for one more push down before we jump? I don't know yet. I don't really like the yens. They're all sideways and stalling. Pound New Zealand. This one's pretty choppy, just like the pound Aussie. It is setting up a really nice corrective trend line. I will be watching this high. If we form a high and go straight across, this might be setting up for a wedge or a double top. If we have this high, look for this to hold this level and break this trend line and work its way back down into previous lows. If there's a better structure, maybe it goes a little bit higher. Maybe we have a rising wedge off of this trend line. I'll still look for a sell trade. I still favor pound Aussie short and pound New Zealand short. I just want to get a better trend line break or something nice and clear because it is really choppy for right now. New Zealand CAD, 85.40. Not much to do on this one. I still want to sell this on the higher time frame. You can see this channel pretty clearly. Here's resistance, here's support, here's resistance, here's support, here's resistance, here's support. But it's also followed by major support right there. And some pretty nice levels around 8,400. So if we can get a pullback or a correction, I would like to fade that move, whether it's at channel highs again or some levels around 8,900. I still am in favor of shorting the New Zealand CAD, but I just need a better entry to do it. So for the time being, I'm just trading my Perfect Storm Range Robot and Active Storm to try to get some pips out of this one and grab a few bucks. New Zealand Swiss. This one is similar to Aussie Swiss, a little bit more sideways, but in the near term, I'm still holding for some support and some bullishness. We had a lot of movement there back in early August and late July. If we end up holding some lows around 6,200, hopefully we see a nice little run. This also could be an influence of the Swiss National Bank. If they come in and weaken things up on the currency pair, then this should recover nicely. If the New Zealand Swiss goes up, then the Euro New Zealand will end up falling. New Zealand Yen, we are stalling. Leave it alone. If this breaks the trend line, we can consider a buy trade with a stop loss and see if this thing wants to come back up. There's still a nice gap around 73.50 actually. From, I don't even remember what this was. This was April, May. It might have been tariff. It might have been something else. I think it was a tweet actually from Trump. It doesn't matter. There's just a nice technical gap right there. And if it breaks a trend line, you have a nice definitive stop area and go after a nice big reward with that gap. So we just need to see some time, right? If time gets on the right-hand side of the trend line and it doesn't take out these lows, then I'd rather buy it, tight risk, and big reward. So that would be a pretty nice trade if it just confirms on the right side of the trend line. New Zealand dollar. Watching pretty carefully. We do have an RBNZ low right there. That's from the news. If this level comes back in and finds this low and holds, we're going up with a tight stop loss. So there are two levels that I'm watching really closely, and it's at one right now. That is 6,400. If you look left, 6,400, major support. We hit it with the RBNZ news. So is that the low that this can build off of? The next level would be down here at 6,200. So I'm not in the New Zealand dollar right now. I would like to be. If this level holds, then I'll probably put in a trade, stop area below, and try to get some recovery back up into any of these previous levels around 66 or 6,700. If it's wrong and it never actually breaks the trend line and just keeps drifting lower, 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 then you look at this and it's like, oh, we should sell it. Yeah, maybe you should. And that news was what the retracement was. But the reality is, if it breaks 64 and still looks bearish, we're probably going to keep going down towards 62. So if you're determined to stay with the trend is bearish for right now. But I often look at support levels, and if I can buy this with a U-turn, I want confirmation first, but if I can buy this and put a stop loss below, we should be able to get this stop loss out of risk and get some profit on the table if we have a U-turn at 6,400. So that's one level to watch, and 62, of course, is the next level. Dollar CAD, currently back above 3,300. My trend line shifted on me for some reason, but I'm looking at this level here. Nice little channel retracement on the dollar CAD. We have seen this do all sorts of patterns with all sorts of consolidation. So we've got wedges that break, channels that break. I still want to be bearish on this one, but this channel could stay for the next couple of weeks. We'll have to look and see what oil does. If oil breaks bearish, then this dollar CAD is going to head back up, and we'll probably end up hitting this area once again around 3,550 to 3,600. Not sure on that yet. Of course, watching the dollar, do we break this channel? Do we end up selling off? Is this just a correction? We'll find out. But the dollar is steady and still choppy. The oil scenario is still wedge bound and still choppy. So you've got indecision on both the dollar index and indecision on oil. It's tough to trade the dollar CAD when you're looking at indecision across the board. All right, so that's what I'm watching for. Dollar Swiss, 98.01. Dollar Swiss, I would love to buy this lower. I'm not doing anything with it right now. If we hit 95.50 or 92.50, I'm buying it. If it goes up to this yellow zone now, okay, fine. I probably won't touch it. I want to try to buy this thing lower. Dollar yen, 106.50, sideways. It's in a channel, sideways, sideways, sideways. I'd say we leave it alone for right now. Dollar peso, oh snap, peso's creeping up. They're 19.8, making some highs. This might be a little bit of a trend on the dollar peso to the upside. If anybody is interested in being long, stop area below. This hopefully has legs to 20.5 or 20.6. And if you are long on this, that's probably another 10,000 pips or so. Let's check. Let's say that current price goes into this yellow box. That's 8,000 pips if we hit 20.6. 8,000 pips, that's not too bad. With a risk of a U-turn around 4,700. So you're just shy of a 2-to-1. Certainly you can go to a smaller time frame and get in. You can look at this with Right Trader offering some entries if you're looking at the sentiment strength line. If you got the amplifier, I mean, we're bullish on most of these. So let me click on the peso, get these all to line up with the peso. So Right Trader is bullish. Amplifier is bullish. My momentum breakout, my sentiment strength line is bullish. Six figure just turned bullish. So if you're interested in trading the peso, it looks like long is the game plan right now. And where to? Look left, and you've got highs. You've got highs. I would say this is another level that the bulls will try to get a point. Score a point for the bulls, and if it sets up nice and cleanly, then I'll look to sell it again. So we actually could have some decent setups maybe over the next couple of months on the peso, one being long now, and then once we end up settling in some highs, we look to sell this thing back off. Krone, this actually came up and tapped 9.00 if I'm not mistaken. It did, just above 9.0. This is a no trade. This is the one we've been watching pretty carefully. Let's wait. I mean, if it's going to be bearish, we have to set up with like a monster move to the downside and then drop. Otherwise, this is stalling. What was previous resistance becomes support, and this continues to go up again. So Krone is not an immediate trade by any stretch. Oil and the dollar, let's go to dollar index. Dollar index, this is the chop that I'm talking about. This was the high that the Fed put in place end of July, early August. We still haven't broken the highs. So what's the deal? Is this the chop suiness that we're dealing with the dollar index? Maybe. Is this going to do nothing but go from this high to this low and stay sideways? Maybe. But there's no definitive confirmation for bulls or bears. I mean, the bears, to me, we have to see much more of an effort to the downside and ideally break these lows, and that should be, you know, the dollar free falling a little bit, the dollar having the ability to just open up the floodgates for weakness. Until we get that confirmation, this is just short-term trading. You know, the dollar is sideways. When you get your points, take your points. I'm holding good levels on Aussie dollar. I'm watching good levels on New Zealand dollar. I'm watching levels on dollar CAD. But everything is, you know, really, really methodical. And I'm trying to get some nice precision. And, you know, if I get 30 to 50 pips and I can protect it, I will. So dollar positioning, I'm still respecting the fact that this dollar index might continue to drift higher until we hit, you know, major resistance around 12,630. Then I would expect nothing more than bearishness from there. But we will see. So more to be determined on the dollar. Oil, hanging steady at 55.65. Here's the wedge that I talked about. Got a little bit tricky with this spike down to $51. Looking for a wedge, and all we're really watching on oil is, can it break lower? Can it break higher? If it stays inside this region between these blue lines, if it's here and here, here, this is not going to be a breakout zone. This is going to be sell high with stops above, buy low with stops below, and trade the consolidation. We might have consolidation for $10. It's 51 to 61 or 50 to 60. You can trade that consolidation, right? So there's still plenty of opportunity in oil if we have this range. But the way I look at this is this wedge started from way back in October, November of last year. So if this is a wedge structure, this wedge should eventually lead into something bigger, like a breakout, That's what I'm looking for the bigger move. And then in turn, we look how we position commodity pairs or CAD because of that breakout. Gold and silver. Silver is back below 17, so it looks like we have a little bit of a stall. So we had highs at $17.50. I just want to see this if we go sideways, just like we did here, sideways, and it pushed up, sideways. If it pushes sideways, look for more upside. If it snaps back down aggressively, let's say it closes really, really bearish, then this is likely coming back down for correction. But if it just stays paused or stays pretty steady where it is, this will likely be more bullishness. And gold, we're at 1502. This one's coming off the highs as well, $15.30. Look for more sideways. Same thing here. Sideways, 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 bullish. Sideways, 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 bullish. If we're going to stare at a correction on gold, then the bears need to jump in a little bit more aggressively, take it back down to 1435, or possibly even try to score a point at 1400. From there, I would be more of the belief that this is going to come back down and find trendline support, trendline support, trendline support around the 1340 mark. But I would suspect that this staying postured here means that more upside can continue to run. And hopefully this yields a weaker dollar. It is, by the way, gold versus the dollar. So for gold to rally, you'd like to think that the dollar has to get weaker. And we really haven't seen that happen on the dollar index yet. Bitcoin, 10.6. So we're still in that channel on Bitcoin right there. So for the time being, it looks like 9,100 is a decent level of support until we start breaking out of this little corrective channel, which means we need to get back above 12. If we get back above 12, then this has room to keep going up. If it's going to stay here, there could be a little correction. We could push down one more time. This could still be channel support around, 8,000. So just need a clean breakout. We had a great run to the upside from 3,000 all the way to 13,000. And now, for the bulls to continue, we need to get above 12 and run. Otherwise, this is correction in the channel until this long-term happens. Okay. So that is really it. Taking a look at the calendar this week, it is a fairly light one. We have monetary policy meeting minutes. That is actually going to be Tuesday's trading day for the Aussie. CPI for the CAD on Wednesday morning. No major news on Tuesday. FOMC minutes, 2 p.m. on Wednesday for the dollar. Do they actually say anything about rates? Do they say something about hinting towards rate cuts again this year? Maybe it's September's meeting. Maybe it's October. I'm not sure yet. But we'll be, I don't know. I'll read some headlines on it and see if there's any price action that follows or supports it. But I'll just be looking to see what is the Fed saying, what's the narrative, and from there we'll make an assessment. And most likely, again, coming into the end of the month, we're looking for pretty clean breakouts. We're looking for tops and bottoms. August is usually a very strong either breakout month or a transition month. Given the fact that we've had that high volatility end of July, early August, and we've had some overextended trends and overextended levels, I would be likely thinking that we're going to see some tops and bottoms forming. But the market can do whatever it wants to do. So if we're looking at just August and the last couple of weeks is pausing, then expect more volatility to kick in here that first part of September. Thursday morning, we have PMI numbers coming out of the Eurozone. There's France and Germany. Retail sales for the Kiwi at 6:45, and Friday retail sales for the CAD and U.S. This is Jerome Powell speaking at 10 a.m. and I'm curious what this is about. Challenges for monetary policy at Jackson Hole. Oh, the Jackson Hole! Oh, snap! So why do I react that way with Jackson Hole? Well, we have all of the big wigs and all the big powers there at Jackson Hole for day 2. Now, I'm curious why day 1's not on the calendar for Thursday, but this is a big deal. Really, I think if you look at the collective effort of what is the global economy going to do, these are the types of decisions that are made at a Jackson Hole symposium. Are all the central banks going to fall back in and be in agreement of, okay, here's what we need to do. We need to be accommodative. We need to start looking back to cut rates or it's not race to the bottom. I mean, if it gets that extreme, that's what it was back in 2011 and 12. That's where, the quote unquote currency wars came into play. But still, these are definitely the decision makers. And from there, the market will likely take some clues. So I will be looking for some headlines this week to see what Jackson Hole has to bring to the table. But it's really Thursday, Friday, and if I'm not mistaken, maybe through the weekend. But if anything major happens, I'll be watching. I'll be watching over the weekend as well. And again, we're coming into the end of August. So look for those breakout levels. Look for those tops and bottoms. We have some really great technical setups across the board for everything we analyze. I mean, I'm looking for the dollar to make a bigger move. The JPY could be a sleeper move that with these sideways movements, I'd like to see the yen do something. I really don't know if it's going to be bullish or bearish. I'm still watching the SPY. I'm watching the stock market for those clues. If we have that rising wedge in the stock market, then we're probably going to rally back to the highs again. 2019 might have one more push to the highs and everyone's going to be so happy and look at what we did, and then it's still going to end badly. So all in all, still be braced for some potential turbulent times here in the next maybe 6 to 12 months. But there could be enough in place by central banks and enough narrative to support this continued run. And in that sense, it might give us some risk appetite. You might see the Swiss National Bank step in. The BOJ might come in with an aggressive stance as well. And if that is the case, then that will keep things afloat and risk appetite will be alive and well. So we look forward to seeing everybody this week in classes and the trading room. If you have any questions for me, you can email me cpulver@markettraders.com. Have a fantastic week and happy trading, everybody. Talk to you soon. Bye.